G'day everyone. This week I'm going to be talking about tech stocks. The Nasdaq index has been the leader in this bull market, so I think it's very important to have a close look at that when trying to determine if the bull market is going to continue or whether we're turning down into a deeper bear market. And if the Nasdaq turns down, then I think the other major indices like the S&P 500, Dow Jones Industrials will follow, and obviously whatever happens in the US, the Australian market tends to follow that. So let's have a look at the Nasdaq. I'm going to bring up a chart of that now. And as you can see, the latest correction we've seen is just a bit over 13% from the peak so far, which is a lot greater than the corrections we saw early on in the year. The other feature to note about the chart as well is that the moving averages, the blue and the red lines on the chart there, are about to cross over to the downside. What that means, the moving averages smooth out the daily fluctuations of a chart, and they're also a visual representation of investor psychology. So when the moving averages that I've got on that chart is the blue line is the 50-day moving average and the red line is the 100-day moving average, and they tend to represent a medium-term trend line. So once those moving averages cross over, so once the blue crosses below the red line and they start to trend down, that often is an indication that the trend is turning down, and we haven't seen that in the Nasdaq since 2015. So it's been more than 3 years since we've seen a change in trend. So what's happening now could be quite important and potentially quite ominous for the next, say, 6 to 12 months trading. My view is that we are in the start of a change of trend, and quite possibly we could be seeing a correction anywhere 30 to 40% in the Nasdaq, which could translate into general corrections in global markets somewhere around 20 or 30%. So let's drill down on that a little bit. You've probably heard of the FANG stocks. I'm going to go through a couple of those charts now, starting with Facebook, which is the chart you see on your screen now. That's obviously looking a lot worse than the Nasdaq as a whole. Share price has recently fallen quite heavily, and it's all the way back to roughly April 2017 levels. So Facebook, which had only just broken out to major new highs a few months ago, is now trading at 18-month lows, and certainly has turned into a downtrend there. The next chart, Apple, obviously one of the largest stocks in the world, still looks pretty good on the chart. You can see the moving averages indicate that the upward trend is still in good shape. There's consolidation going on there, but as far as that chart indicates, there's not a huge amount of concern for Apple at the moment. Turning to Amazon though, there's been sharp falls in the share price over the last few weeks, and judging from the moving averages there, they're starting to turn down as well. Early days there yet, but it is a slightly ominous sign for Amazon given its extreme valuation, and I think just last week it had a miss on the revenue line, and that will lead investors to reassess the growth multiples that are priced into the share price there. Alphabet, which is the parent company of Google, as you can see, that's fallen quite heavily the last few months. The moving averages have started to turn down there. The important level for Google or Alphabet looks to be around about the $1,000 mark per share, which is roughly where those lows were from early on in the year. So I'm sure we'll get some rallies in the next few weeks, but moving forward, that $1,000 mark per share is important for Google, and if it breaks below there, that will tend to suggest that the tech stocks have certainly gone into a deeper bear market. Let's have a look at Netflix. Once again, that stock has fallen along with the others over the past few months. It actually peaked back in May and June this year, and it's been falling ever since. Once again, the moving averages are about to turn down on that stock, and roughly $300 per share seems to be holding at the moment, but there's not a lot of support around on the charts for Netflix, and the indication is there you'll see lower prices in the months ahead. So going back to the Nasdaq, it does look like we're going to get a bounce from here. The prices are well below the moving averages, and often when that happens, the market is stretched to the downside. We'll get a bounce. But what happens after the bounce is important, and how far the index bounces will be important to look at. As I said, in my view, we're going to get further falls in the months ahead, and I think the Nasdaq will move into a bear market as we move into 2019. Thanks for listening, and be sure to click on the link below to subscribe for more market updates.